Hello traders, first video in about 3 or 4 weeks. I think it's been over a month since the last video, and look, I've got to be honest with you, I had a bit of social media fatigue, and I often wonder how people manage to do all these videos all the time and actually trade. First and foremost, as most of you know, because I'm producing evidence to show it, first-hand evidence, is that I actually do this for a living, and therefore trading takes priority. And that's what's happened over the last month. Is I really was focusing on my own trading, and even after 15, 16 years, look, I've just done 116% in June, but I don't take that for granted. Okay, I wanted to make sure that I was devoting the right amount of time to reviewing things that I'm doing, making sure I'm still on top of my game and I'm adapting to market conditions and changes in those market conditions. And really, that's what this video is about. A lot of people, I'm sure, who would have produced 100% in a month would have, and I'm not talking about anyone in like personally, I'm just saying in general, the industry seems to be all about, oh look, I produced this so you can do it too. No, that's not what I'm here to say. Ideally, I'm going to be honest with you, I would like to have more realistic returns that people who are starting out in the business can aim for. But I've been in the business a long time. If I'm producing, 100% plus with low drawdowns, that's because there's reasons for it. The fact that I've been honing my craft for a very long time. That doesn't mean people can't be consistent. They can, but you got to put things in context, and that's all my point is. That I'm not here to preach to anyone and tell them that, look, if you do what I tell you, you're going to be making 100% a month, because the reality is you're not. Okay, you may be able to obviously start to become consistent, but this is me, and this is basically specific to my sort of journey and where I am at on that journey. If you're just starting out, you've obviously got to be realistic and aim much lower. But at the end of the day, the second thing you've got to realize is that these sort of returns that I've generated this month, the 116% that you see here on the sheet, is more as a sort of result of the backdrop, the volatility backdrop. Okay, so I'm going to do some amazing analysis, and actually it's just going to be a follow-up. So you can see it here from a previous YouTube video, number one way to trade forex and futures during coronavirus. I'd heavily recommend, if you haven't seen it, go and check out that video. And I showed what the range was like in terms of relative to the prior sort of 6 to 12 months. And really what I'm going to do is I'm going to update you on that, and I'm going to show you that volatility has really collapsed in terms of the ranges that we're seeing, and that's really allowed me to boost the returns versus the amount of risk I'm taking. And final point I want to make about the returns is that there seems to be this whole myth around you need volatility to make money. Complete and utter rubbish. Okay, the reality is, when volatility dampens and reduces, it allows you to take less heat on your positions. And that's all that's happened. Okay, is I've sort of been able to take less heat on my position, so it's made me more comfortable to take a little bit more like aggressiveness towards some of the positioning I've been doing, and I'm going to show you that. And then finally, I just wanted to say, so it's going to be, obviously we're going to do the range analysis, and hopefully it won't take too long. But look, we're going to very quickly, and it's going to be very brief, I'll show you the MyFXBook, because it's really sad, I have to say, that a lot of people um, that messaged me and actually left me a couple of reviews on my review page. It's really sad. There's someone like me, a professional, who's giving up my time to sort of steer people away from what I believe is heavy misinformation, and I'm backing it up, okay, with 100% verified stats. I'm using a very, very reputable broker, and yet people say to me, well, you've got open trades, you've got floating positions, you've got this, you've got that, and they're leaving this on my review pages and stuff, and it's completely false. Okay, firstly, they don't ask me, right? If they ask me, I'm happy to show them. Actually, no, I don't have those things, and that's why I'm going to show you. Look, I've got no open trades. Okay, I'm completely flat, and I made a full withdrawal of June 2020. So that's the reason. I'm going to quickly show you that, and then we're going to get onto the corona virus analysis. And then, just as a more of a light-hearted comment I want to make is, I was tempted to also say haircut analysis, because another reason I've stayed away from the filming is, in terms of the hair, it was getting a little bit out of hand, because obviously all the hairdressers have been shut, and I've been following the government guidelines, and um, the hair was like, you wouldn't even be able to see my face. It was that bad, so there was no point in me filming. So I was tempted to put haircut analysis, but I kept it professional. I didn't. But the truth is, I managed to get a haircut during the week, and it just reminded me, and it actually ties in nicely with the fact that we're coming out of not necessarily the COVID situation entirely, but there's been an easing in lockdown, and that's helped people. Um, Obviously, in terms of risk taking, um, and as I said, there's less nervousness in the market. That's the word I was looking for, and you'll see that, right? So it's quite funny. It actually ties in with the fact that I was able to get a haircut. Things are open. Business is starting to come back. Now I understand there's surges in cases somewhere, some places around the world, and we may go back into lockdown, but I hope not. But just wanted to sort of have that sort of balance all the seriousness with a funny moment there. And look, final thing I say is, I hope you're all keeping well. I really hope that wherever you are, the COVID situation is not affecting you too badly, and hopefully there's now a bit of silver lining. So let's get on. I'll quickly show you the MyFXBook, then we'll do the analysis, and then I'll let you go. Cheers. Okay, so what we've got here is essentially the all my returns for the year, which, as you know, I like to split out so I can track my drawdown. So you've got from the start of the year, January, and then coming up to June. Generally I've been tracking at between 30 and 50%, as many of you know. Then this month, obviously, I've had outsized returns, and actually, if you follow my Instagram, July month to date is, I believe, around 40% already, with about 4% drawdown. So I'm not going to focus on that because the month is still going. So let's see where we end up at the end of July. I just want to focus on the end of June, because as you see here, it was 116%. So if I click into that, and let me just move this down a little bit, because I believe the banner might be just covering it. There you go. So this is essentially June. So my point is this. Look, it's been outsized returns. Obviously, I haven't had a losing day this month, but look, put it into context. I've been in the game a very long time, all right? If you have losing days, it's completely normal. In fact, if you didn't have losing days, it'd be a bit abnormal. I'd actually be more worried if you didn't have losing days. This is the culmination of 16, 17 years work. The only reason I show this stuff is, obviously, as you know, I do offer, I'm giving general advice on YouTube. I also have my G7FX course, as you know, and I like to make sure that people feel comfortable that what is being told to them is being done with credibility. That's all it is, okay? I'm not here to tell you you're going to be making 100% a month. It's completely ludicrous, okay? And even though, yes, I've openly shown it, I consistently make double-digit returns, etc. I get a lot of people saying to me, "Oh, if you're making, this 100% of," sorry, I'll just get the thinner pen. If you're able to make these sort of returns every month, 100%, and so on and so forth, you'll be a trillionaire. You'd be a multi-millionaire in 6 months, and complete and utter rubbish. Come on, people are living in cuckoo land. They need to wake up. I'm sorry to say it. Get their head out of all this retail nonsense they're being told on spreadsheets where you're doubling your account all the time. And no, that's not how it works in the real world, okay? This 100%, this is my point. A lot of people say, oh, you got floating positions, oh, you haven't withdrawn it. Okay, I have, right? I'm a one of the only people out there who probably actually does this for a living. You know, I have outgoings. Obviously, I'm withdrawing from my account, right, to support my family and so on and so forth. So, I don't compound heavily for those reasons, but also, what you got to realize, right? So, let me just show you this. So, you know, you can, I go over stats all the time and I don't want to bore you with that again. So, you can have a look at all the stats, and if you've got questions, you can let me know. Profit factors and etc. etc. You can see they're very good. The drawdown is incredibly low, 4%, 116% return. Speaks for itself. In terms of the profit factors, almost 5. I mean, it's very good, let's be honest. But I really want to say, look, open orders, no data to display, okay? I don't have any open orders. The book is closed. If you look at my history, at the end of the month, I made a full withdrawal, okay? There are no positions, guys. There's nothing there. So for all those people that, for whatever reason, and I mean it with all due respect, have nothing better to do but to, you know, say to me I'm somehow fiddling the books and all this, completely, you know, just at least reach out to me first and ask me, because you'll see, and I'm showing you here actually, very openly, that look, I'm not here pretending that I've been trading for 1 year, 6 months, and I'm smashing it out of the park. No, this is 16, 17 years, and that's why I'm able to do this. So I'm giving you some good perspective, and like I said, I'm not sitting here saying that you'll be generating these returns overnight, because you won't. My point is, you need to build up towards consistency, and obviously, if people are dishing out advice, make sure there's some credibility there. So that's the only reason I show it, right? But look, coming back to the point was about compounding and all these rubbish I see on spreadsheets about, oh, if you do 5% a month, you'll be able to turn £1,000 into 1 million in 2 years. And it's just so much rubbish. You know, even this, where people say, oh, I don't believe you're making what you're making, because if you were doubling your account like this every month, then you'd be able to turn your 100,000 into 1 trillion. And come on, you got to wake up, right? The reality is, professional traders like myself, we get comfortable trading a certain size, whether that's 10 lots, 50 lots, 100 lots, it doesn't matter, right? That's why I don't show pound amounts, because that's not important. What's important is you become comfortable trading a certain size, you get comfortable taking certain floating drawdowns throughout the day. So for me, if my floating drawdown is that I'm comfortable with is, say, you know, 1 or 2, 3, 4%, or whatever that is, if I might be taking throughout the day or in a session, the amount of heat, and you know, let's just say that that is £5,000, then obviously I'm not going to have an account bigger than 100,000, am I? Right? If someone's comfortable taking 10,000, 15,000 daily drawdowns, right, they're not going, and it's 5%, they're not going to have account sizes that are what? Smaller than like 200,000, 300,000, whatever. My point is, just because you're doubling your account doesn't mean you would then suddenly double your account size the next month, because your floating drawdowns you're going to have to take in a day will also double. So, you know, if I'm used to taking £5,000 or £10,000 drawdown in a day, I'm suddenly going to have to double that to £20,000, to £30,000, to £40,000 if I keep doubling my account. Come on, right? It's ludicrous. You've got to start thinking about the risk and not just the return. This is a game of risk and return, and you've got to understand that professional traders like myself, we become comfortable with certain daily drawdowns in dollars or pound amounts, and therefore, just because you're producing this, it doesn't mean you're going to be able to compound it the next month. There's psychological barriers that you need to overcome, and every year I'm always pushing myself to be comfortable to take bigger daily drawdowns. You know, I was like everyone else. When you start off, it's very small. It might just be £100, £200, £300. I'm talking 15, 16 years ago, right? For me, and for you, you might be starting there and saying daily drawdown might be for me £50, you know, and eventually over years you can build that up towards being comfortable taking daily drawdowns of going from 100 to 200 to maybe 300, 400 to several thousand. I'm comfortable with now. But that doesn't mean just because I make £100, next month I'm going to double that to, oh yeah, I'm okay with a floating drawdown of £10,000, 20,000, 30,000. Look, this is my point. You've got to realize it doesn't work like that in real life. Yeah, it's a great month, but that means I will withdraw the majority of the money. In this case, I'll withdraw all of it. And next month, I might add a little bit more. Okay, but I'm not going to double my account, and all of that stuff you see on a spreadsheet is hocus pocus nonsense, marketing, whatever you want to call it. That's not how it works in real life. And apologies that I went on a little bit. It's just because I get it said to me so many times that, oh, if you're doing this, why don't you just double up every month? Okay, hopefully that gives you clarity that it's okay to make outsized returns. Withdraw your profits. It's actually more sensible to do that. You're trying to get to a stage where you're doing this to support your lifestyle, instead of maybe having to rely solely on your job. If you're doing this in conjunction with a job and whatever you're doing it at, the same point is you're wanting to draw on this income, aren't you? That's the whole point. So therefore, it's not a game of Monopoly where you're just sitting on a spreadsheet doubling it. All of that, you've got to get it out of your head, and you've got to come into the real world and realize, this is a real life, real money we're talking about. And, just like you guys, I have bills to pay, I have things to do, I have a family to support. And, trading, I've been lucky to be able to do that from trading. And that means if I have a great month, it's good because I can withdraw that much more. And yeah, I will put a little bit back in, but it's not how you see it on the spreadsheet, is my point. And so hopefully that was useful for you. Let's do the final bit, which is the COVID distribution analysis. Okay, so I just wanted to give you a very quick insight into how I actually built the normal distribution analysis and how anyone can do it. Okay, so I'm not going to take you through the full procedure. I might do that in a later video, but I just really wanted to show you that, look, the data, I got it straight from MetaTrader 4, a retail platform. Okay, so I went into tools, history center, and then I got into my currency pair, which was, I'm looking at the pound, and I went to the daily data and literally I hit export. Okay, and that allowed me to export the data into Excel. So I'm going to get the Excel spreadsheet, and I'm going to show you what I did with that data. Okay, so here's the spreadsheet, and if you go back to one of my previous videos about, coronavirus, forex and futures, or one of these videos, I think it was about 2 or 3 videos ago, you'll see I did quite an in-depth analysis on this. And actually, what I've done right is, so I did 116% this month, and I wanted to show you why I was able to, like I said, push the boundaries a little bit. It's not going to happen every month. I'm the first person to say that. But there's reasons behind it. And actually, if you look at, again, I explained it in that video, so I'm just going to explain it very briefly. All I did is I took basically all the ranges, daily range of the pound over the last year. And this applies to the futures market as well. As you know, I trade crude oil and E-mini S&P 500 heavily. I actually trade them more than these markets. But I know people are familiar with, obviously, foreign exchange, and it's a little bit easier for me to do the analysis here on the pound because of the way that we've just seen the exacerbated ranges just completely collapse in this market. And obviously it's a bit of an easier analysis because I can just extract the data straight out of MT4. You can do it for futures, etc. It's just a little bit more of an involved process. But look, the story is exactly the same. So if you look here, this is the exact data that I showed in that last video, where I basically took the daily range, as I said, and I plotted it as a frequency distribution. And, really you can translate that into a probability distribution by just saying, okay, out of the total number of observations, which was 260 days, so we're talking 1 year, right? Working days, trading days. 1 year, how many times have we seen a particular bucket in terms of a range? And then what is normal in terms of one standard deviation, so 70% of the time? What do we typically see? Well, we see a range of 80 pips to 180 pips. Now, if you look at the start of the crisis in March, Monday, the 2nd of March, all the way through towards the end of the month, the average range was over 300 pips, 326 pips, right? And as you know, I didn't trade that month because I saw this and I thought something's not right here. I'm going to back off because consistently we're at the edge of the range, right? We're at the probability of us seeing this type of range is what? Very, very low, right? You're talking in these upper quartiles, very low, less than 5%, okay? And trading, and it's the same in banks and institutions, they're trading models, they're traders, and trading models can be a human being. They're human traders. The brain is calibrated to get used to things. We're habitual, and therefore you're used to trading in a manner of the market being what? A certain way 95% of the time. So when you get these wild ranges, you're not used to it, and it becomes very difficult for banks, traders, but also their models to adapt. So they switched them off, and I talked about this in that video, and you can have a look. I showed you the depth of market where the supply got pulled, etc., etc. And even if you look at individuals' days here, look, they're all outside of the normal range, right? My point is, this month being able to produce incredible alpha is highly, highly correlated to the results in terms of the range we saw this month. Now, what I've done here is I've put, are we outside of the normal range, right? Which is there, 80 to 100 pips. Every single day we were outside. Look what's happened in June this month and look at the average. Guys, we've gone from an average of 326 pips per day on the pound to 130, right? And people tell you you need volatility, right? You need volatile markets to make money. Well, hang on. March, I made 0%. June, I made 116%, and look at the volatility, collapsed. Okay, so actually what I'm here is to tell you that it's the antithesis to what you've been told, complete opposite. Look at the daily. My best days were when it was like less than 100 pips. Look at all of these. They're all, apart from two that, and even these, they were right on the edge. So technically they're right there, okay? Pretty much every single day when I match them to what happened in March, the daily range is exactly, within the normal range of what, and sorry, it's a terrible drawing, but you get my point. It's within the normal range of what we've been used to seeing the last year. Right? Completely different environment. No indicator, trend line, moving average, none of this rubbish is going to tell you any of this, okay? You show me one indicator in the world that is going to tell you that the market condition has changed like this. No, okay? And to be honest, the final thing is, and I'm done basically with the video, is a lot of people will say, oh, this looks complicated. Do I need to be able to understand all this? No, you don't. Because actually the reality is, and I've said it before, because I focus generally on, 1, 2, 3 markets, I don't look at many markets. It's actually obvious to me that the range was going down by actually just observing it, okay? When you're watching 5, 10 markets a day, you haven't got a clue what's happening to the volatility without doing this type of analysis. I could actually tell without doing this analysis, and I'm going to be honest with you, I didn't even do this analysis until yesterday. And this is an important point, and it's important I say this because I know I've done some really polished videos up until now, and they've been quite, nice and appealing. And actually, this video has been more about transparency and me being just open about things and more real because the truth is, I want you to know I didn't actually do this until yesterday. So it's not like I was tracking this throughout the month. No. You know what it is? I watch the pound every single day. I watch the S&P 500 and I watch crude oil every day. 3 markets. That means I can actually see it every day. I just know. Oh, look, the last few days range. I can just eyeball it. Oh, look, it's about 100 pips yesterday. Oh, it's about 100 pips the day before. It's 100 pips the day before. And I can know because I'm watching the market every day. Oh, it was about 300 pips back in March. Towards the end of the month, towards the end of March, yeah, we calmed down a little bit, but it's still very high, 300 pips. Whereas this month, I just know by watching it, That was about 100 pips. Therefore, I put this analysis together yesterday specifically for this video. Wasn't even surprised. I knew that this was the result I was going to get. So my point is, no, you don't need to do this, okay? You should be able to know this off the back of your hand just because you're observing the market every day. So I guess the conclusion is, look, you should really be sticking to one or two markets every day. And if you can't, if someone asks you, look, what's the rough range of your market the last month, and you don't know the answer to that, I would question whether you're looking at too much stuff. Okay, that's what I would say, right? Ask yourself honestly, do you know what is the range of your market in the last month? Approximately. I'm not talking down to the tick, I'm talking to the closest 10, right? Is it 50 ticks? Is it 200 ticks? Is it 100 ticks? And then what is the range relative to the month before or a few months before? You need to know this because you need to, obviously, like I said, trade it slightly differently in terms of your risk management and obviously how you're holding positions and so on and so forth. So look, I hope that was really useful. Like I said, I took a little bit of a break. I'll try and be back more frequently. And I know some of my videos are not, as, I don't know the right word for it, sexy or appealing as a lot of the, in my opinion, nonsense that you see spouted here. I'd rather just tell you real, that look, it is hard work and there is analysis and work to do to be able to generate those type of returns, but anyone can do it with time. And I say this on my 4-part series where I say, to really develop this type of skill set takes 9-12 months to really start even thawing away at some of those challenges. So look, if you haven't seen it, obviously head over to my Instagram or sign up for the 4-part series. I hope that was useful. Feel free to leave me comments, subscribe to the channel, and I'll be back soon. Thank you.